Welcome to the BitBoy Morning Show. Today we're going to take a closer look at, are we in a bear market? Bitcoin absolutely crashed yesterday. I mean, not a flash crash, but it did go all the way down to $94,000, which is just unbelievable. It's about 96 right now. We'll take a look at it here in a moment. But I don't know how much longer we can say it's not a bear market, but I still feel like it can get back up rather quickly. We were just at all-time highs 5 weeks ago. So remember that. All right. Let's go ahead and get started. Move to the charts here. Okay. We're moving to CoinGecko anyways. Market cap is down at $3.53 trillion, down 3.4% overall. 24-hour volume is 290.13 billion. Bitcoin dominance 57.4%. ETH dominance 11.5%. I think down a little bit. All right. Visualization here of the market cap. Sorry, I didn't know it went that low. Market cap 3.4% shows you what that looks like. 24-hour trading volume, that shows you what that looks like. I don't really know what it's showing here. Just steady volume, I guess. But where do they get these numbers from? Okay. Zcash, Bitcoin, and Starknet, all trending. Here are some top gainers. We're going to take a look at Starknet. What is it? All right. Here you see the all chart for Starknet. I didn't think it did very well in the beginning like it was supposed to. So, I mean, the fact it's going down to where it is now. I mean, this thing had a, $400 billion worth of volume at one time. And now it's, well, it did have another 400 billion one day recently. Let's see. Let's go to the website. I remember when this launched. The Bitcoin DeFi layer, supercharged by ZK Tech. Earn yield on your Bitcoin securely and easily. It's got Ledger involved, MetaMask, Circle, some other good projects or good crypto businesses. Unlimited scale. Starknet utilizes the power of Stark technology to ensure computational integrity. By validating off-chain transactions with advanced math and cryptography, Starknet overcomes Ethereum scalability limitations. Starknet is a validity rollup that proves unlimited scale while retaining Ethereum's security and decentralization. I like how when you hover over it, it moves. Kind of silly. Kind of silly, but it does get your attention. Creativity unleashed. Let's see. Oops. Starknet is on the road to becoming the first fully decentralized L2 in 2025. Efforts to that end run through 3 lanes. Read about them here. So there you go. You can find out more about what Starknet is at the bottom of the frequently asked question. Cairo is their programming language. So that one is trending and it's in top gainers of the day. So and I tell you, you're looking for a coin to put some money into. Let's go to the 1 month on this. This one hasn't really came across our radar yet. It's still outside the top 100 at 115 or so. So in my mind, I think this could be a good runner that might start being, for a month or so, might have some really good gains. So watch out for that one. Pay attention. Okay. All right. Get into Bitcoin. So one more refresh to make sure we have the latest number. Bitcoin coming in at $97,024. There you go. Over the last hour, it's up 50%, 0.5%. Can't talk today. Ethereum at 32.37. It's up 1.4% for the last hour. Everything's hitting a little bitty rebound here today, finally. In like the last 2 hours. 0.9% up for XRP. BNB, Solana, Still under 1,000, still under 150. Tron, Dogecoin, Cardano, all top 10 altcoins. See where they're at. Dogecoin up 0.7% over the past hour. And so is Cardano, actually. Tron up 0.8%. All right. So the last hour. World 5, we're really moving. Again, 2.9% last hour. How is it up 2.9% last hour, but 1.1% in the last 24 hours? I guess that can make sense. Usually you'll see, well, I guess not. Yeah, like you have a good hour, but you're exactly even on the 24 hour. I guess that means it got hit yesterday pretty hard, decently hard. Aave, Hyperliquid, all good gains in the last hour. ICP continuing to flounder after a great month. This is normal. Zcash 1.4%, also normal. Zcash still the biggest mover the last 24 hours. Aster right behind it. Monero, Aptos, World5, Leo token. But they're all gainers for the last 24 hours. Aave, in the last 24 hours, big loser, 12.4%. Pepe, 9.8%. Sweep, 8.6%. Toncoin, 8.1%. It feels like a lot of these coins had their chance to pump, had a turn to pump, and now they're just not moving. Okay, let's go to the week. Look at the losers first. Internet Currency Group, right? Internet Computer, ICP. Down 24.9% for the last week. Zcash down 15.7% for the last week. Altcoin 15.1%. Biggest gainers: Uniswap, World5, Provenance Blockchain, Monero, Render, Aster. This Provenance Blockchain is very interesting one to me. It's the one I know the least about. And when I scroll through and it stands out, it's usually in the top 2 or 3 gainers. It's interesting. All right, 30 days, down for the last 30 days. We have, ignore this, because Canton Coin doesn't have a 30 days yet. Mantle down 36.6%, Athena 36.3%, OKB 36.3%, Sweet 33.3%. A lot of 30% or 20 to 30% losers. Cardano down 24.1%. Chainlink 21.6%. A lot of big losers in the altcoin market these days. Thanks to Bitcoin, of course. Biggest gainers: Zcash, Internet Protocol, Filecoin, White Bitcoin, Monero. Ooh, Monero. Man, thought about getting in on that. And that's why I say watch out for this. Watch out for Starknet. It's kind of starting to show up a little bit, and it had a lot of money behind it when it's first launched. So not many gainers, much more losers than gainers, but it's a good time to be a gainer. 69%, 26.6%, 6.2%. Just like nice numbers here. Okay. These were not trending this morning, so I don't have anything pulled up on these, but that's a meme coin, obviously. I don't know what this is. Let's look. Network of virtual chains. Virtual chains are fully customizable, EVM compatible chains that run smart contracts on Near. So this is on Near protocol. Top crypto projects are already building on Aurora, Graph, Curve, Gnosis Safe, Prevalent Pith. Here, good list of projects here. Build with Aurora, easiest setup, fast to deploy. Setting up your fully custom virtual chain and join the network virtual chains can be as easy as setting up a Shopify store. Can we launch a chain right now? Very interesting. All right. So that's what's trending today. But let's move on. Check out what's going on with Bitcoin. It was all the way down to 94,500. It's back up to 97,167. But I had these lines drawn up here for this one line. But it dipped from this line, but it's created a more momentous downswing here. The whole point is market structure is not broke. It's still intact, but we're getting lower lows. They're even below our trend line up here. So we're above where the lows were during that. You got a low, you got a lower low, and a lower low. So that is not great for the market. It's not great for if you want Bitcoin going up. You need to see some higher lows at some point. Come back up to this. Basically, the $100,000 level would be nice. But I don't know how fast it's going to happen. We're going to be taking a look at a good bit of that today. Bitcoin falls below 98,000. Will it continue to drop? We asked ChatGPT. What an easy article every day. Bitcoin's price dropped below the $98,000 mark on Thursday, sending shockwaves through a market already rattled by accelerating losses across major cryptocurrencies. The drop, which pulled the world's largest digital asset to its lowest drop since May, has sparked concerns that Bitcoin could fall further as we head into Christmas. Is Bitcoin merely flushing out leverage before a fresh push higher, or should traders lock in for more losses before Santa arrives? To gauge sentiment, we turn to ChatGPT and Grok. ChatGPT is great. ChatGPT's take. ChatGPT kept calm despite the market chaos. Bitcoin slipping under $98,000 isn't pretty, but context matters, it said. Corrections like this are normal, even healthy if the broader structure remains intact. The AI argued that Bitcoin's positioning is stronger than many headlines will suggest. Look, markets love drama, but structurally, Bitcoin continues to benefit from institutional flows, plus long-term holders historically love to buy these dips. One ugly red candle doesn't erase years of adoption, it said. Despite its optimism, ChatGPT acknowledged volatility is likely to persist. Could Bitcoin fall further in the short term? Absolutely. Trend breaks always get messy. But unless we see a complete collapse of demand, I'm not ready to write the obituary for this cycle just yet. Okay. Well, Grok said, never shy about throwing shade, didn't mince words with its pessimism. Bitcoin didn't just dip, it face planted, it said. People expecting an instant V-shaped recovery might want to drink a glass of reality. Grok argued that traders often ignore warning signs for weeks to delude themselves into thinking positivity is around the corner. The charts have probably been screaming, slow down for months, while everyone else was chanting to the moon. Now that the market is doing what it always does, everyone is suddenly surprised? Give me a break. Grok doubled down. Sure, Bitcoin has survived worse, but hoping it magically snaps back above $110,000 next week, that's not analysis, that's fan fiction. According to a real person, said that Bitcoin's latest slide fits a much darker technical picture. Bitcoin is leading this crypto crash, calling today's low of $96,000 a critical breakdown and the clearest signal yet that the cycle has peaked. Broader crypto market may be headed for further losses, with total market capitalization potentially sliding to $2.92 trillion and even $2.5 trillion market cap before any meaningful recovery takes shape. To hear you highlighted that Bitcoin's price action since 2022 has closely mirrored the broader crypto market cap. Of course. Both completed a 5-wave upward structure from late 2022. Bitcoin's now broken down from an ascending wedge, signaling the pattern's exhaustion. The move marks the end of a multi-year diagonal uptrend. There's a bear market beginning. Relative to the rest of the crypto market, Thierry said Bitcoin is still in its early stages of a crash. If Bitcoin continues to decline, Next closest support level will be between 57,600 and 70,600, representing another decrease, he wrote. Here he said that the breakdown, divergences, and failed support levels all indicate that this current cycle has likely peaked. Crypto market has crashed much harder than Bitcoin, he wrote. If the latter accelerates its decline, the rest of the market could follow quickly. Could quickly plunge. So there you go. And I'll give you my 2 cents on all this, which is go to the daily chart. I mean, look how fast it went up. Like, it went up with a bunch of sideways moves and then went up. Now it's definitely, we have a change in market structure for sure. But if we go back to May, it was all the way down, around these levels, and then it shot right back up to 104K, cleared out of the 108K, a new all-time high, came down a little bit, and then popped up again to almost make another new all-time high, 123. Then finally made another one at 124, I think. Yeah, 124. And then made another one at 126,200. Here's my thought on this. I just don't think that we're looking at a normal bear market. I think we're going to see seasons of bullishness and seasons of bearishness. We're definitely in a season of bearishness right now. But I think once it all turns around and people start buying, the buying pressure goes up again, then people who bought over here, they're going to buy here again. This is what retail always does, by the very tops. But we got to get it going back in the right direction here for sure. There's no doubt about it. We are in a season of bearishness. We're looking at more information around this. By the way, this is why this happened. I believe is right now we are down to about 50-50 for our Fed rate. We're about 50-50 for the Fed Watch tool here. This was upwards of 60-65%. Now it's almost 50-50. So if we do not get a rate cut, the markets are going to hate that. And I don't know how close we got to get there. I mean, if this goes to where we're in the lead over here, that's a very concerning thing. People did not bake this in. People baked in that we would be getting another rate cut. They baked in 3 rate cuts for the year. But now we're at a place where if it really is 50-50, it would be good if it's 50-50, because if it's 50-50 and we do get a rate cut, then we'll get a big boost. But if it's 50-50 and we don't get a rate cut, that is not going to be good. The market is not going to like that one bit. So Bitcoin falls below 95,000. Its 4-day route picks up steam. Bitcoin dipped below $95,000 on Friday, pushing the world's oldest cryptocurrency further into the red and continuing its 4-day decline amid a broader artificial intelligence league stock pullback. Digital asset was trading at $94,896, down 3.5% on the day. Bitcoin was in the red most of the week, although it reclaimed 107,000 at one point during Tuesday before rolling over. Largest crypto by market cap attracts many of the same investors that pour big money into tech stocks, linking the two trades. Several of those stocks are falling this week amid a resurfacing of concerns over Silicon Valley giants, astronomical spending on AI initiatives. They should just ask AI how to fix it. Futures tied to the NASDAQ fell more than 1% for the bell on Friday, with Meta, Alphabet, Intel, NVIDIA, and Tesla shedding between 1% and 5% in pre-market trading. Crypto-linked stocks fell early Thursday morning. Share of the software firm and Bitcoin Treasury Strategy, formerly MicroStrategy, dipped 6% before the bell. Trading platforms Gemini Space Station and Coinbase stocks fell 5%, while bullish shares edged down 3%. Shares of digital asset mining firm Bitmine Emerging Technologies were also trading 5% lower. Bitcoin dips below 96,000. Analyst says drop, validates correction. It's 94,000 before pivot. We've already hit that basically. We didn't hit it though. You hit 945. Bitcoin tumbled to a 6-month low of $95,919 in the early hours of November 14th. A move seemingly triggered by 870 million net outflows from spot Bitcoin ETFs the previous day. In the early hours of November 14th, Bitcoin briefly tumbled to 95,000, marking its lowest point since May 5th. The drop followed, which has been characterized as the second largest net outflow of spot Bitcoin ETF traded funds on November 13th, totaling $870 million. Although the top cryptocurrency recovered to settle above 97,000, the sharp price action cast doubts on the prospects of another milestone selling rally before the end of the year. The swift decline immediately erased significant market value. Bitcoin went down by approximately 6%, pushing its market capitalization below the $2 trillion threshold to $1.94 trillion. Due to Bitcoin's dominance, the overall crypto economy's market cap declined by approximately 6%, $3.73 trillion in 24 hours. Furthermore, over $500 million in leveraged positions on BTC alone were wiped out, with long positions accounting for more than 9% of the losses. Overall, the wider crypto economy saw the liquidation of $1.1 billion in leveraged positions across 246 traders. Top cryptocurrencies retreat occurred amid heightened concerns over the sustainability of the artificial intelligence stocks rally. AI stocks rally. Critics warn that many AI firms are overvalued, potentially existing in a dot-com style bubble, which could foreshadow a future collapse impacting broader sentiment. For crypto critics, drop well under $100,000 signals that bears have seized momentum and that BTC could decline further. However, some experts view the decline as a necessary correction for the BTC uptrend. Before BTC reclaims the uptrend that led to its all-time high in October. Crypto analyst Kasi Trades commented on the bearish action, stating the data suggests the correction is close to finishing. She noted the momentum indicates BTC could briefly touch closer to $94,000 before stabilizing and reclaiming the $97,000 level. Remember, it is possible that this support cluster is what ends the entire correction for Bitcoin. Lines up with what we're seeing on altcoin charts right now. XRP, HBAR, Algo, XLM, and others are all approaching their macro fib supports at the same time. The analyst believes that once the market stabilizes these critical support levels, it will likely gain the momentum, the necessary momentum to pivot out of this corrective phase. There you go. So the question is, are we in a bear market? As Bitcoin plunges below, is crypto in a bear market right now? Massive exchange-traded fund outflows, declining institutional and retail spot appetite, and increased selling pressure from whale activity have investors questioning whether crypto is in a bear market. Bitcoin dropped below $95,000 Friday morning, down 8% on this day, and over 24% since its record peak of $126,200. Just 5 weeks ago, according to CoinGecko data, according to CoinGecko data. In the past 24 hours, more than $1.24 billion in crypto longs have been liquidated amid the market slump, according to CoinGlass. Sell-off is not limited to crypto markets and can be seen across equities, with the S&P 500 index dropping nearly 1% in the pre-market trading session, while gold is down 2.76% today. The bellwether crypto is down over 10% since Monday's highs, putting it on track for a third consecutive weekly down close candlestick. Bearish sentiment is reflected in falling investor confidence, as seen on prediction market Myriad, where users' chances of Bitcoin hitting 115,000 before 85,000 have dropped from 71% just 4 days ago to 46%. We had looked at that number earlier on the show. But now it's only 46%. They'll hit 115,000 before it hits 85,000. Fighting the downturn. Judging by market movements over the past 3 months, we must conclude that we are currently in a bear market. Adam Chu, chief researcher of options analytics platform Greeks Live, told Decrypt. Despite the presence of considerable divergence in investor sentiment this week, put options have now gained the upper hand following Bitcoin's breach below $100,000 mark today. CryptoCoin's bull score is lighting up the bear market territory. 8 out of 10 key on-chain metrics are bearish. From falling stablecoin liquidity to fading network activity and capital exiting derivatives, this network mirrors the late 2021 and early 2022 cycle. Perpetual markets open interest, which tracks the total open positions, has been steadily rising since October 10th liquidation event that wiped out 19 billion in positions, suggesting an uptick in speculation activity. Meanwhile, the cumulative volume delta, which is the difference in total buys and sells, is declining steadily, suggesting that sellers are in control. When combined, these two indicators suggest that short-term sellers are dominating the perpetual markets, according to Velo data. A drop in the Coinbase premium, which tracks discrepancy in capital dynamics between the U.S. and global crypto markets, into negative territory signals that demand from the U.S. is waning. Final factor is a drop in institutional interest due to macro and geopolitical uncertainties. It's evidenced by outflows from exchange-traded funds and the slowdown in digital asset treasury-driven accumulation. Though the geopolitical and macroeconomic uncertainty was resolved, the overhang persists, with experts suggesting that traders are focusing on the damage already done, including weeks of missing economic data. All in all, the crypto market outlook remains grim, making this one of the worst fourth quarter performances. Bitcoin's sustained drop from its record high of 126 to below 96,000 has pushed the formation of a death cross, popular bearish signal that occurs when the 50-day simple moving average crosses below the 200-day simple moving average, indicating that short-term momentum is declining faster than short-term momentum. The signal marks the start of a bear market, or so the belief goes. I don't think we use that. Almost every time we get the death cross, Bitcoin goes up. Not every time, but almost every time. It's less about calling tops and bottoms and more about recognizing that crypto is transitioning from an overhead environment into a more measured one. We're in a corrective phase within a broader cycle. I agree with that. We're in a corrective phase within a broader cycle. That's where I feel like we are. So I don't think we're in a bear market, but we're definitely in a correction. There's no doubt about that. I think the only reason people are calling it a bear market is because the time. It seems like this is supposed to be the time when it goes down, and it is actually mimicked that and is going down. However, the market's very resilient. We've got institutional, guys messing with us now. Institutions messing with Bitcoin more than ever before, and that's why I think we're not going to see the same thing that we always see. And this is a big drop already from 126 to 96. So, but that's all we got for today, guys. I hope you guys enjoyed the show. Appreciate everybody, and that's all I got. Be blessed. Go out.